Get ready for the biggest market moves of the week. Trifecta Capital Advisors LLC just boosted its stake in Meta Platforms, Inc. by 5.2% in the fourth quarter, making Meta Platforms their 13th biggest holding in their portfolio. We dive into how major players are positioning themselves in this tech giant and what this means for the stock right now.
Never get caught with a dead phone again. This INIU portable charger is compact, travel-friendly, and gives you fast 45-watt charging with a built-in USB-C cable, so there's no need to carry extra cords. With 10,000 mAh power, it's perfect for busy days, trips, emergencies, or anytime your battery drops too low. Grab yours on Amazon through the link in the comments before your phone hits 1%.
Next up, we look at the growing activity from other major investors. Alpine Bank Wealth Management increased its position in Meta Platforms by 0.3% in the third quarter, while Valued Wealth Advisors LLC lifted their stake by 3.2%, showing a lot of movement across the board for this social networking giant. Then we pivot to the insider activity. We examine the recent sales from Meta Platforms insiders, including CFO Susan J. Lee selling shares and COO Javier Olivan selling stock, revealing what key executives are doing with their holdings in the company. And finally, we tackle a massive legal challenge. Santa Clara County is suing Meta, the parent company of Facebook and Instagram, alleging the company is enabling billions of scam advertisements, putting the tech giant on the defensive. Don't miss the full breakdown of this huge lawsuit and what it means for Meta's future. Stay with us. Noi Dung Kai Tight. Trifecta Capital Advisors LLC has significantly increased its investment in Meta Platforms, Inc. stock, boosting its stake by 5.2% during the fourth quarter, as disclosed in its latest filing with the Securities and Exchange Commission. The firm now holds 23,129 shares, representing approximately 2.3% of Trifecta Capital Advisors LLC's total portfolio, and making Meta its 13th largest holding, with the position valued at $15,267,000 at the end of the reporting period. /N/ and other major investors have also shown activity. Alpine Bank Wealth Management increased its position by 0.3% in the third quarter, now owning 4,301 shares valued at $3,159,000. Valued Wealth Advisors, LLC lifted its stake by 3.2% in the third quarter, acquiring 14 shares to reach 454 shares worth $334,000. First National Bank Sioux Falls raised its holdings by 0.7% in the fourth quarter, owning 2,001 shares worth $1,321,000 after purchasing 14 shares. Levin Capital Strategies, LP grew its stake by 1.4% in the fourth quarter, now holding 984 shares valued at $649,000, and Vista Capital Partners, Inc. increased its stake by 1.3% in the second quarter, owning 1,075 shares worth $794,000. /N/ institutional ownership remains substantial, with hedge funds and other institutional investors controlling 79.91% of Meta Platforms stock. /N/ regarding the company's recent performance, Meta Platforms stock opened at $609.63 on Monday. The company boasts a market capitalization of $1.54 trillion, with a P/E ratio of 22.16 and a beta of 1.25. Following its quarterly earnings release on April 29th, Meta reported earnings per share, EPS, of $10.44, surpassing the consensus estimate of $6.67 by $3.77. Revenue reached $56.31 billion, marking a 33.1% increase year-over-year. The company also recently paid a quarterly dividend of $0.525 per share on March 26th. /N/ analyst sentiment remains mixed, with several firms issuing varied ratings. Piper Sandler reaffirmed an overweight rating with a $800 target price, while Raymond James Financial maintained a strong buy rating, but lowered its price target to $800. The consensus price target among analysts is $840.31, with an average rating of /moderate by /, reported by channel YouTube.com. /N in insider activity. CFO Susan J. Lee sold 56,571 shares in February, and COO Javier Olivan sold 2,778 shares in April, both transactions disclosed in SEC filings. Over the last 3 months, company insiders have sold a total of 167,676 shares. Meta Platforms, Inc., formerly Facebook, Inc., continues to evolve its strategy, focusing on augmented and virtual reality technologies alongside its core social networking products including Facebook, Instagram, WhatsApp, and Messenger. Cannes Film Festival is maintaining its strict no-selfie policy at red carpet premieres, despite a new sponsorship deal with social media giant Meta. Festival director Thierry Frémaux firmly stated that the ban on selfies will remain in place, emphasizing the separation between the festival's artistic direction and economic concerns. Frémaux noted that the festival strives to remain independent, asserting that no sponsor has ever dictated terms, citing the L'Oreal case as a parallel. However, a potential loophole has emerged. The news indicates that attendees might bypass the selfie restriction by using Meta glasses. As a first for this year's festival, TikTok star Reese Feldman is set to conduct red carpet interviews in the capacity of a reporter for Meta, utilizing his Ray-Ban Meta glasses. This comes as Cannes officially inked a multi-year deal with Meta, the parent company of Facebook, Instagram, and WhatsApp. The tech behemoth will establish its presence at the Majestic Hotel during the event, focusing on promoting its platforms, artificial intelligence, and wearable technologies. The dedicated Meta House will feature a roster of influential figures, including French filmmaker Enora Hope, fashion creator Liaz, Belgian photographer Bleg, Italian creator Matteo Varini, Spanish cinephile Ivan Hashes, London-based culture creator Zainab Jiwa, UK fashion voices Lola Clark and Victor Kunda, alongside French basketball player Diamant Blasi. Noi Dung Kai Tait. Meta Platforms is experiencing significant volatility in its stock performance following recent earnings reports, with market reactions swinging sharply between substantial gains and declines over the past several quarters. In Q2 2025, shares surged 11.3% post-earnings, while Q3 2025 saw an identical 11.3% drop, followed by a 10.4% climb in Q4 2025, driven by guidance projecting the company's fastest revenue growth in years. However, even after exceeding revenue targets in Q1 2026, shares fell 8.6% following the report released on April 29. This fluctuation is largely attributed to investor apprehension surrounding Meta's artificial intelligence strategy, which is reflected in shifting price targets from Wall Street analysts. /N analyst reactions have mirrored this volatility. Following the Q2 2025 earnings surge, analysts substantially raised price targets, boosting them by an average of 15%, which surpassed the stock's own post-earnings move. In Q3 2025, analysts who updated their targets generally reduced previous projections by about 5%. Following the Q4 performance, most tracked analysts increased their price targets, leading to an average updated target of approximately $870, suggesting over 23% upside. /N despite the short-term turbulence, analysts maintain a consistently bullish stance on Meta stock, projecting considerable long-term upside. The aggregate average of updated price targets settled near $815, implying more than 35% upside potential. Furthermore, all updated targets were positioned above Meta's current trading range in the low 600s. Nearly all analysts issuing updates maintain a buy or overweight rating, with only one hold rating remaining after the latest report. /N and the recent sharp drop, despite year-over-year revenue growth of 33%, exceeding the 30% growth implied by midpoint guidance, was primarily triggered by Meta's 8% increase in 2026 capital expenditure guidance, setting a range between $125 billion and $145 billion. While some analysts lowered targets, moves were mixed, with some firms issuing moderate increases. The wide range of updated targets, from J.P. Morgan Chase & Co.'s $725 to Rosenblatt Securities' $1,015, indicates a potential upside range between 15% and over 60%. /N optimism is also bolstered by recent developments in AI, specifically the release of the Muse Spark model, which has been rated significantly higher than previous Llama models, positioning Meta better to launch competitive new AI products. Although the company remains reserved on specific product details, the potential for future announcements suggests upcoming momentum. Trading at a forward price-to-earnings ratio of around 20x, which is lower than its 3-year average of 23x, Meta's long-term outlook remains solid despite near-term disruptions. However, some top-rated analysts suggest alternative investments for immediate gains, as Meta was not included in a list of stocks identified for a potential spring 2026 surge. Santa Clara County has filed a landmark civil lawsuit against Meta, the parent company of Facebook and Instagram, alleging the platform is enabling and profiting from billions of scam advertisements. The suit, filed Monday in Santa Clara County Superior Court on behalf of all California residents, claims Meta's social media platforms circulate approximately 15 billion scam ads daily, negatively impacting its 3.5 billion users, including seniors, families, and small businesses. County Counsel Tony Lopresti stated that Meta allegedly earns an estimated $7 billion annually from fraudulent advertisements, sometimes by charging scammers a premium to post them. Lopresti asserted that Meta is not above the law, emphasizing that the platform is being used for scams ranging from cryptocurrency, fraud, and impersonation of public figures, to advertising miracle cures. The complaint accuses Meta of violating false advertising and unfair competition laws, seeking an injunction to halt these practices, monetary restitution, and civil penalties, some of which could be directed to the county for further consumer protection litigation. The lawsuit is heavily supported by internal leaked documents, which a May 2025 presentation reportedly estimated Meta was involved in 1/3 of all successful internet scams in the U.S. The county highlighted the financial toll, noting that Californians lost over $2.5 billion in 2024 due to these scams, with Californians over 60 losing more than $800 million. The suit specifically targets vulnerable populations, including the elderly, people of color, and low-income individuals, alleging Meta uses targeted advertising to exploit these groups. In response, a Meta spokesperson issued a statement denying the claims, arguing that the reporting distorts the company's efforts. The spokesperson claimed Meta actively combats scams by removing over 159 million scam ads last year, launching new protective tools, and partnering with law enforcement globally. However, Lopresti countered this by alleging that Meta's fraud prevention teams have been restricted, reportedly told they cannot impact revenue by more than 0.15% of the company's total revenue. The lawsuit further alleges that Meta facilitates deception by promoting and providing special protections to vetted business partners who support scam advertisers, essentially monetizing the deception. County officials expressed confidence in the legal action, stating they are excited to hold the tech giant accountable for what they describe as poisoning the digital landscape.